going really, really well. As you know, we've got the wet beneficiation test work happening with Mintech in South Africa, and we've got dry beneficiation test work happening with two equipment suppliers in the US, FL Smith and Sturtevant. The wet beneficiation test work's confirming everything that was done in the 2012 study, except that I think our recoveries will be a little bit higher, which means we might be able to drop our cut-off grades a little bit lower in the deposit. On the dry beneficiation test work, it's going a lot better than everybody expected. Both places are essentially sizing the material, putting it through a dryer and then putting it through an air classifier to remove the dust. What's been a surprise for us is we're putting material in at around about 30% P2O5 and it's coming out at close to 34, which is a much bigger upgrade than we thought we'd get by just removing the dust. So again, we'll be looking at maybe dropping the cut-off grade, and we'd previously looked at 3.5, 4 million tonnes. It might go up as much as 6 million tonnes of the deposit is available for that. So the test work itself, really, really happy. On the wet test work, what we're seeing is we'll probably need a lot less equipment than the flow sheet before, because we're now doing more detailed test work than we'd done previously, and on the dry process it's even less than that again. Yeah, well, I guess I was sort of alluding to that in the last answer. It's going to have a very, very big impact on the CapEx. If we just take the wet process to start off with, already it looks like we probably won't need a thickener, we probably won't need a filter press. That's going to make and we probably won't need cyclones or strain separation to get the undersize out. So that's going to have a big impact on the CapEx. It's making the flow sheet a lot simpler. And the project a lot easier to run. If you go to the dry route, it's even simpler than that, because we're really looking at just 3 pieces of equipment, and you also lose the need for a big water supply and a tailings dam. So the CapEx is going to come down big time on both of the projects. Similarly, if you're running less units of equipment, then the OPEX will come down as well. If you look at the operating strategy, previously in our study we'd always looked at owner-operator on the port, owner-operator on the land transport, owner-operating on the mining equipment, and we're now looking at contract solutions for all of those using local contractors or contractors that we bring in. So I think there'll be a big reduction in the CapEx. Final results from the test work will be available this month, November, and the reports will be submitted to Ausenco as the lead contractor for the BFS. Ausenco will start pulling together the costings for the wet process route. The equipment suppliers will provide the costings for the dry process route, and that'll happen in December. We'll be able to feed all of the recovery, grade, mass flow parameters plus the costings into the mining consultant, G Mining, and they'll optimise the mine for both routes based on the block model that we already have. That information should be available by the end of January, and we'll get together in February and we'll make a call on which route we want to take through to the final BFS. I was at the port about 3 weeks ago. There was trucks, diggers, cranes, equipment everywhere. They almost finished building a camp for 800 people to start on the wet side of the port. I was staggered at how much work was happening. So it's going to be a really great project for Cabinda, and obviously a game changer for our project.